Welcome back to another edition of the Profitable Home Services Podcast. This is the podcast where we uncover hidden profit leaks and we help you build a more profitable business. We don't want you building a business that's just busy, but we want it to be wildly profitable. I'm your host, Diane Gardner, and today we are diving into a topic that we've not had on this show before. I'm going to just kind of leave you hanging there for just a little bit and welcome this week's guest. So, our guest this week is Wade Carpenter from Carpenter CPAs. Now, hold on, don't get nervous. These two accountants are not going to get too nerdy on you, we promise. But Wade has a brand new book out, and it is a derivative of Profit First. And you guys hear me talk about Profit First all the time. So his is Profit First for commercial construction. And as I was telling Wade before we went live recording, I think this is probably one of the best derivatives of the Profit First book that I have personally read. So I wanted to say a major congratulations on Wade on pulling this off. This is a huge undertaking to sit down and write this book when you're already running a full-time business and you already have your plate full. So with that, Wade, welcome to the program.
Thank you for having me. I appreciate it, and I appreciate the words on the book. I spent the last year of my life writing it, and I think it's written in a little different format, where the business fable type format, which I've always loved, and I think it's an unusual way to teach.
Right. I that's part that really drew me in and it kept me hooked in the storyline. Where so often when we write books, and I know a couple of my books are there behind my head, they're not written in a storyline. They're just more educational. Here's some information, chapter by chapter by chapter. So I love the fact that you did that. And I know that this book is aimed at commercial construction, but my home service guys oftentimes end up working on some commercial construction jobs. So I figured we were close enough in topics that it would be great to have you on the program today.
Well, again, thank you. And the book really was not written specifically for commercial construction. Sean Van Dyke had his Profit First for contractors, and I had to pick a derivative. And I couldn't go like just construction. I couldn't use the word contractors, but the book really does address several things. Even though the story is rooted in a commercial setting, I think it has application to all contractors all throughout the U.S.
And I will agree that it does, because in there you talk with and about the subs that are working on that project in addition to just the GC. So I thought it was great the way you pulled in the rest of the guys and showcased their struggles and their hardships and areas that they were having a hard time connecting the dots. So I really love the way you did that.
Well, thank you. And that was sort of my way of, we're talking from the GC, but then you got some people like that, the heavy equipment guys that, have all this money tied up in debt or equipment and those kind of things. They have special needs, from the general contractor, from the electrical
To the plumber, to
concrete
you
guy.
bet. Yeah.
So this allowed me to sort of bring in the concepts that I wanted to bring into it. So,
So again, great job. I want to talk about a couple terms that you used in your book because they
okay.
weren't necessarily, well, one of them in particular was not necessarily a term that I would have been familiar with until I heard you start talking about this. And let me back up a second. In complete trying to think of the word, transparency. Wade and I have been friends for many years, and we are part of another group that we're partners at another company called Profit Plus Academy, where in that company we strive to help those smaller businesses that really can't afford a coach or a coaching program. And so we reach out and we try to help those. It's kind of a give back into the community. There's two other members of our group as well. And we record training videos, things that'll just good common business sense that can help them grow their businesses and become a stronger business and a more profitable business without getting one-to-one access to us. So that's how I met, really got to know Wade. I knew him through the Profit First world, but didn't really get to know him until we went into partnership in this other business. So anyhow, during the course of some of our meetings, I've heard him toss around a term called Job X. And Wade, I'm going to let you give us a little definition on what that would include and what it means and why you call it Job X.
Okay, well, so I think you and I, coming from the construction world, we both realized that Mike McCallotz's definition in construction of what materials and subs is not a complete definition of what goes out on a job because what cash goes out because you have that job. It covers a lot of it, but it's an incomplete definition in construction. And, there's also a lot of confusion about, a one step versus a two step. That's another topic altogether. But, I didn't feel like materials and subs was like something that rolled off your tongue, number one,
No.
but I also felt like it was incomplete. And the other part I make, the point I make in the book about the definition of cost of goods sold, or, from a GAAP standpoint or you know, for the IRS actually can be very different versus your management of like your owner wants to see everything thrown in job costs because they, want to make sure everything's covered versus that project manager that say, I'm not going to get a bonus because I don't make a profit on my job because you threw depreciation in on my job. Why should I have to pay for depreciation? So I was trying to capture a different concept, and it's not the same thing as job cost. I wanted a clear definition, and you and I both know that there are some there's nuances to job X, but we have operating expenses as OpEx. We also have CapEx for capital expenditures. You may have heard that term, but I was like, okay, I just need a short way of saying this, and this is not job costs. So I came up with job expenses or job X.
I
That's the
like that.
long and the short
And
of it.
and what would be the difference between Job X and just normal cost of goods sold?
Well, as you and I both know, I mean, accounting rules say we're supposed to put in things like our depreciation that I just mentioned. That's not cash out on our job, but you've also got labor that I know we've never really discussed this, but if you got people on your payroll and they are going to get paid 40 hours a week, whether they got a job to work on or not, if you pay them vacation, all that stuff, in my mind, that is overhead. You've got to pay them no matter
Right.
what. And, my GAAP rules may say that you're supposed to allocate your project managers to jobs and stuff like that. And we could probably debate that till the cows come home. But from a standpoint of what goes out because you have a job in cash, that's what I'm trying to capture. And that's what I was trying to give contractors a clear definition of what is um, cash that you need to put in this one bucket that we're going to set aside. And the main purpose of this bucket is so that you stop borrowing from the next job to pay for the last job. Clear and
Now,
simple.
wait a
That's it.
minute, Wade. They would never do that.
Well, you and I both know that's common
It
practice because cash
very
flow,
common.
and that this as you said, I don't know if you noticed the subtitle, the a business fable about mastering construction cash flow. It's not we are teaching the profit first principles, but it's about construction cash flow and profitability in construction means nothing if you can't take home a paycheck, basically.
Right. And how often do our owners go without a paycheck because the cash flow, something happened and the cash flow didn't flow the way they thought it would at the beginning of the job? And so I love that you're setting a separate bucket aside. I know in my home service world, we tend to have a bank account just for our vendors. So we can always pay those vendors. Now, that might include a little more than just straight vendors. It might include knowing that this particular job they're going to have to pull a permit. It's going, could include some other items in there that they know they'll have to pay. So let's go ahead and put that money aside so that we protect it and it's there to do its job. Because I think you and I would both agree that every dollar in a business has a job. Ooh, that just sounded like something Kevin O'Leary would say. But
Yep.
every dollar in a business has a job. And if we have them crossing over and doing each other's jobs, we end up with a jumbled mess. So if we can keep all of our job costs and expenses categorized separately from all the operating overhead, capital expenditures, those types of things, it keeps the business running better and it helps with just generally understanding how are these jobs going, whether it's a bigger commercial job or whether it's a smaller home type job that my guys may tend to do. So I just think it's so important to protect that cash because it can evaporate so quickly. And now it's like, where did it go? Like you gave a really great example in the book about getting a draw on the job, but they ran out and bought a pickup. That was a great example because that happens all the time. And in reality, that money should have been allocated to some other areas.
Well, I
So,
think that's part of the point is the fact that we need to carve this out. And the original profit first implies that you don't need a separate bank account. That's, in my mind, that is a number one absolute. You got to have that sixth bank account and put that money aside. But having this job X bucket does more than just say, okay, we're covering these expenses. It gives you some kind of idea of how to bid your jobs. It gives you some kind of
definitely.
like, I mean, and if you say it's 70%, you're saying you're making your 30%, but that bucket continues to run dry. Either something's happened where either you're not bidding correctly, maybe your material prices have spiked, maybe you got some kind of, I love your term, profit leak somewhere. You know, you know, there's all kind of things that could happen. Your mix of jobs, you could be making a ton of money on, say, a bathroom remodel, but then you go into like a whole house, and you make a smaller profit. Well, you're gonna feel that. You're also gonna feel that, like if your job X and things start. Well, we'll get into the OpEx. I know I think you wanted to go into job X versus OpEx on here, but don't let me get ahead of myself. So.
Oh, go for it. We're fine. Go for it.
Well, again, this is comes from my years of working with contractors, and you know, one of the things that they consistently do wrong is figuring out that markup versus margin. And the traditional, break even comes from a financial statement, GAAP, profit and loss standpoint, but it does not factor in all those things that happen with cash flow. And so, your operating expenses are not all on your P&L. Or
No, they're not.
well, when I say OpEx, what should OpEx should be covering, which is this second other bucket, is going to have to cover all those truck payments on your fleet and your skid steer and your mini excavator. Those that cash is going out. And some of it may be going into your interest bucket, but some of it may be going to your principal. But that cash is not showing up on your P&L. So if you're figuring out your break even, which I don't know if you talk about that on this, but most contractors don't know what that number is.
They don't. No, and that's such an important number. I know
Absolutely.
in my coaching programs, that's one of the exercises that we work through is where is your break even and at what day in the month have you covered it? Are you covered by the 15th of the month or is it the 29th or the 30th of the month that you finally have covered all those operating costs? And it's always so eye-opening when we run through that exercise and they'll just kind of shake their head and said, I never would have guessed that because usually it's later in the month than they thought it would be. In their minds, oh, we've covered all of our costs by the 10th or the 12th or something. In reality, they haven't. And
Mhm.
so it's very eye-opening, mainly because we do go in and we include those loan payments and we include maybe there's a line of credit payment that has to get paid back because you took a transfer off of your line of credit so you could do this job. All those things have to get factored back in there, and they don't sit on your P&L. And so that's why this can be so eye-opening when we actually sit down and work through that with our different home service businesses.
Yeah, and so, like I said, when we have these factors dialed in, they are perfect things to think about from bidding your job. Don't think about it from the P&L standpoint. Think about it from your cash flow standpoint, because only then are you going to have that money carved out for your owner's compensation, your taxes, and actually have some cash left over at the end of the job when you're actually finished, some that you can take home or choose to put towards your debt or your goals. So, again, my idea of this was that, we have to have some clarity on our cash. And what I see often is like I actually came across one I've been working with about 2 months now and had gone through another supposed the Profit First Academy and spent a lot of money on this. And they had one bucket for 94% of their money was going in OpEx.
Oh no.
And you can imagine where there's no clarity. Like, okay, well, we just dumped it in here, and this contractor was so lost. And so when we put these, like, this is what your OpEx versus your JobX, that gave her so much clarity. Like, okay, this is exactly what I needed to know, and then it gave her some kind of real feel. She saw very clearly that her overhead was way out of whack
Mhm.
and why she couldn't ever take a decent paycheck home.
Last week, I sat down with one of my coaching clients and we completely changed their chart of accounts. It still is usable for a tax return, but we turned it into what I would call management based chart of accounts. So we rearranged things so he really now can see what is his cost of goods sold percentage. He never knew what it really was before because in the past, all the labor was down in the overhead. So we went through employee by employee by employee and we allocated things out. We rearranged his overhead expenses. So everything to do with marketing is now sitting in one subcategory so we can see what is he really spending. It was in all kinds of categories. So now it's all pulled together. We were able to rearrange like the cost of his office and his occupancy type costs. We got all those together. And then we actually had the rest of just kind of more of a general overhead. But it was able to give him now some percentages on what is he spending on these different areas. And I'm looking forward to our next meeting because now he'll get to see the new and improved P&L, which should give him some really good insight into what his business has been doing that we couldn't get from before. So you don't always have to stay in GAAP, which is generally accepted accounting principles format, because these businesses, we're not trading stocks, we're not doing anything like that. And it's far more important that, in my opinion, that it's in a format that's usable for the owner so we can actually figure out what are those costs because we can't decrease cost of goods sold or decrease overhead costs if we don't know what they are to begin with, if they're incorrectly coded through your chart of accounts. So I won't say it was a fun exercise, it was a tedious exercise, but it needed to be done. And I'm sure, Wade, you've done quite a few of those in your career as well, where then the light bulb starts coming on. It's like, oh, now cost of goods sold is that much? We got to do something about that.
Yeah.
So, yeah.
Definitely gone through that exercise many times. And, when you put it on the P&L, I agree. I mean, it's like when you can see it a lot clearer, but a lot of times, quite frankly, business owners don't look at that P&L as much as they should or really absorb it. And so with Profit First, we talk about some things like creating bank accounts to cover some of these things. And I talk about some of the stuff to cover labor, your debt, your equipment, and those kind of things, seasonality. But, the point is, if you got in clearly in one bank bucket that says, okay, you're running dry in this. I mean, your profit leaks. You're trying to fill this bathtub with your drain wide open. You don't have some kind of idea of where to plug that bathtub up. So I don't know. That's where I'm going with it.
Yeah, I love that concept. Um, I think it's amazing when we have the different bank accounts and they can watch and see, is my balance staying about where I need it to be? Have we overspent? Or are we saving up appropriately because we know there's a big annual insurance renewal coming up in 3 months or something? Are we going to have enough money to cover it? In your and my world, we look at renewing our tax software. That's a big expense. And
Hmm.
so I don't know about you, but I transfer money every month to cover that cost so that when it comes around,
Okay.
it's there. So same type of thing in their world, that when we have those big expenses, we can put them into a bank account and know that when it is time to pay it, the money's sitting there. There's no stress. This works really well for income taxes because if you're putting that money away as you go, then generally speaking, you'll never find yourself in trouble with the IRS. You'll always be able to make your estimated tax payments and pay any liability that might be owed. So there's just seems like there's so many reasons to have these various bank accounts. And I've had clients with as few as 4 or 5, and with as many as about 15 or 16 accounts, just depending on what the goal of the owner is. What do they want to be able to see? And I'm sure you experience that when you're working with your contractors as well.
Absolutely. And the more clarity you can give them, personally, I actually have 19 bank accounts, at which, is probably excessive for a CPA firm, but it gives me a lot of clarity. And a lot of our contractors, I think, are probably you probably see the same thing. They got all the work they can do, and they put trying to just okay, let's get to that next level. That okay, we just need a bigger boat thing. If we can get to that next level, and they've got all this work, and so I think of their business like a leaky garden hose. It's like you got pressure, great pressure at the start, but you got leaks all through that hose. So by the time it hits that nozzle where you get some profit out of it, all of it's leaked out all over these different things. And we're all, as the business owners, we're the last to eat, always.
Always. Yes. And
So,
that's really sad that the owners are last to eat.
well, I guess part of the point is like patch some of these pinholes in our garden
Hmm.
hose, I guess I would say.
I was thinking of one of those soaker hoses where you got all these
Yeah.
little tiny holes and it's spraying up everywhere. How
Yeah.
can we start plugging those? And I always use the metaphor that of the leaky bucket. You've got some great big holes and then you've got smaller holes and then maybe you got some that are just dribbling out a little bit. But let's get those big ones sealed up. Let's fix those profit leaks. And then now we'll work on the next ones down. And then finally you get down to hopefully you don't even have anything dribbling out. But I would say every business has some sort of profit dribbling out of it.
Absolutely. And
Yeah.
there's so many ways it happens in construction because, it's not the same thing as a manufacturer that has a controlled environment. It's
Yeah.
not the same thing as a retailer that, okay, well, this comes in and it goes out. You got so many moving parts on a job that it's just, you know, no two jobs are really the same. Even if I mean, I've had some contractors that go around the country and do a certain type of job and they can predict things a lot better, but quite frankly, there's going to be something that comes up.
Mhm. Yeah. There's still
And,
variables.
when you can put some guardrails like that, those bumpers up at the bowling alley the little kids use so that the bowling ball doesn't go in the next next lane, I guess that's what we're trying to do here, right?
Right. Yeah, because I know your goal, my goal is we want to work with businesses and help them become wildly profitable. I know we both have little stickers that say proud to be profitable. That is something we're proud of, is that we're able to work with these businesses, help them find, identify, and plug those profit leaks put that money back into the business or the owner's pocket. That starts beefing up our profit account, allows that owner to make sure they're taking home a reasonable salary consistently, not just occasionally, but consistently. Um, I know that's a huge point when they can get to that point in their business that they consistently take home a salary and that they're not just paying themselves minimum wage either. So I remember years early in my business feeling like I was making a whole $2 an hour. Woohoo. It's like that was pretty disheartening back then. But getting to that point where you could take a decent salary and then be able to take your quarterly profit distributions on top of it. So those are some big goals to work towards for most contractors, home service businesses. They're all in that similar type environment that as they get squeezed, it gets harder and harder to make these jobs profitable. And right now, as we're recording this, I know that tariffs are causing some squeezing again on these kinds of businesses, and it's affecting their profit because it's increasing their job materials. And it can potentially be slowing down their ability to get those job materials. So we're living in another round of uncertainty, just like we had back during the COVID era of what's going to happen. How are we going to keep these jobs profitable? Are we going to have enough jobs coming in? Are people going to start holding on to their money because they're uncertain of what's going on in the economy? So many unknowns and so many variables in this industry.
And that's a perfect reason why you need to get a very clear definition in cash of what goes out because you have a job. It's, not just the materials and subs, but as we said, the licenses, permits, bonds, you talked about the dumpster fee, but, stuff like that, that, cash goes out because you have that job.
Mhm.
And I guess I say, if it's like you spent that cost and it came back like dusty, muddy, or smells like diesel, it's probably job X, you know? Um, so again, what does it cost for that job to eat? I mean, if basically think about it like your job X is the grocery bill. I mean, if it didn't feed that project, it doesn't belong there. And by the same token, everything else that goes in the top X bucket, really, if it's going out in cash, you really need to understand that. And so that gives you some kind of factor to put in place and allows you to see if your margins are slipping because of something like the price hikes or your margin changes. One of the other points I make in the book is about, I go back to 2008 when things,
Scary. Mhm.
yeah, when things started going down and contractors did not know that it was time to like, hey, we really need to make some drastic changes. Otherwise, we're not going to survive this. And so that's what I see. I think I said it in the book. I've said it many times over the years. If Mike McAllowitz had written his original version of this, how many of my contractors would have survived
Yeah.
2008 that didn't?
Yeah. So many of them went out of business during that time period. Lost some really great clients because they closed up their business.
Yeah.
Yeah. Yep. Something that we see in my world, which is more of the home service businesses, is these financing fees. So, in order for a roofer to get a roof replacement job, they'll offer some sort of financing, or um, might even be a large HVAC job or a plumbing job, those types of things. And in my opinion, it's tied to the cost of that job, and so I put them up in your cost of goods sold or your job X fees, where a lot of times other accounting individuals will put it down in your overhead expense, and I argue back that you wouldn't have that expense if you didn't have that job. So it is part of the job, and that can be a fairly large number. I have a client on the East Coast that is a very large number for them. So we want to make sure that that we're actually digging through your P&L and looking for those pieces that really are part of that job, because sometimes they can get buried. Some of your Insurances, depending on what kind of job you're doing. You may need some specialized type insurance over and above just your normal business liability. Those kinds of things that can creep on and you don't even realize that they're buried down there, but they're really part of that job because of the kind of job that you were doing. So being aware of all the different costs associated with that job will help you bid that, but will help you bid the next job, especially going forward, and be able to actually make a profit on it. And we really want to caution, I know Wade and I both want to caution to you of don't try to undercut your competition in price, because when you start doing that, it just becomes a competition to really bad type drastic type results that can happen, and eventually the business goes out of business because they're losing money on a job. And so we kind of always want to caution against that. You know your value, you know what you're worth, you know what it costs to do your job, you know what it costs to hire the best guys that you can possibly have on your team or gals on your team. I'm not trying to be, single one out of the other, but you've got to have enough money in that job to be able to treat your team well and to also cover these hard costs. So don't compete, especially as things get tight. Don't try to be in that rush to the bottom where you're just constantly competing on price and trying to undercut everybody. There's another story about that in Wade's book, and I won't spoil the story. So you definitely go out and order a copy on, it's available on Amazon, I believe, Wade. They
Absolutely.
can
And
pop
other
out there.
retailers too. But
Yeah, okay. Yeah. But he's got some great pieces to that story that I thought he really made the point well on pricing and competitors and all those types of things of how you have to fight so hard to protect your profit. And it seems like, I don't know, I'm going to say since about 2008, because we both were in business back then, it seems like it's harder to have a consistent profit since that point forward than it was prior to that point. Seemed like it was pretty easy. Most of my businesses were profitable before that, but now it's like we just get going, then something changes in the economy again, or something changes in the congressional world. They'll pass a bill or whatever, and then up with the skyrocketing costs on a certain piece of materials or whatever it might be, or some other legislation gets passed, and now you can no longer offer this kind of a service. So it seems like we have to fight so hard for our profits now, harder than we used to. So we really want to protect them. And part of that is knowing and understanding your costs, knowing those numbers and watching those numbers like a hawk so that you don't let unforeseen things creep into your jobs. Or if they do creep in, you become aware of them fairly quickly. Anything you want to add kind of on that angle, Wade?
well, yeah, and I appreciate you bringing that out because, what I said in the book, I mean, it's just some guidelines. And I was actually working with an electrical contractor just 2 days ago when trying to get in profit first. And this guy went to all over the Southeast where I am. He's not just, in the home state. The travel expenses were
Yeah.
way out of, he was spending about 300,000 between travel and meals and all that stuff. And
Wow.
I had him put that in his job X.
You bet.
But the whole point of carving it out in a certain bucket is so that you know exactly what it's costing you. So if things are getting out of line, and to your point, yes, you shouldn't be bidding more than or bidding anything less than what you take in profit. But if at least you're going to be running short in your cash because of it, that's the point, is you're not covering those buckets. So there is not going to be any profit left over. And when you think about it from that standpoint, that was my whole goal of that. And so, that was the other thing is, by the same token, that OpEx number and that surrogate of your overhead can go a long way to helping you bid properly. The other part of these things, like you were talking just a minute ago about our tax software, well, I'd address seasonality. And depending on where you are, whether it's weather related or there's several different variations of seasonality, or that workers' comp bill that comes, once a year, the audit hits you or whatever. I mean, those unexpected expenses can wreck the best laid plans. So when you understand the flow of your cash, I think that's part of the idea of how can we squeeze out more profit and take more home.
One of the things that I'd like to just add quickly in here, and I'm going to go off topic just a little bit because Wade just talked about being able to take more home. Well, when you're an owner in your business, we wear multiple hats. I don't know how many hats we put on in the course of a day, but we put on a bunch of them. One of our hats is our hat where we are working in the business as an employee. We're doing the job that we would have to hire somebody else to do, and that's the piece that we get our salary for. That covers that part. But then we have our profit account. And in that, the goal of that profit account is to reward you as the business owner for taking the risk of going into business, for taking the risk and buying that piece of equipment that you need in your business. Oftentimes, our business owners put their houses on the line, which I hate to see that when that happens, but they put their homes on the line so they can get a particular loan, or they put other personal assets on the line so that they can grow that business and be able to take that next step in business. So there's an awful lot of risk involved in being a business owner. And so that profit account is another one that needs to get protected as much as we possibly can because that is your reward. If you think of yourself as a shareholder in a corporation, a shareholder in a corporation gets a dividend periodically throughout the year. Well, think of your profit account in that same way. And it changes how we see our businesses when we look at it through a shareholder set of eyes, knowing that we're going to get a particular percentage, distribution or dividend over the course of the year for taking all that risk. And that's something that we can use to reward our families with. We can maybe hit a personal goal that we've been working towards. We can do something fun with the family. Those kinds of things. Our families bear the brunt of our decisions of going into business. Our families put up with us not coming home on time for dinner or going back to work in the evenings, which I'm sure Wade and I, neither one have ever done that, or
No.
coming in and working on the weekends. Our families are the ones that bear that brunt of that. And so if we can reward our families as well with our profit account, that allows them to give us a little more grace when needed because they don't understand these hours that we work and they don't understand some of the decisions that we have to make. And oftentimes we make them on the fly. And so profit count is so important, as is your tax account. You don't want your family going without because it's time to pay income tax. And so these are just a few of the accounts that you may want to have when you've got your profit first system up and running and humming along. I don't know about Wade, but I always suggest an emergency fund. So you can have 3 to 6 months worth of operating capital sitting there so that if something happens, you can still keep paying your guys. You can still keep your business humming, may not be humming at top efficiency, but you can still keep it going. A lot of times I'll have it like a CapEx, or I call it sometimes a future growth account. We know that we're going to need a bigger building in a couple years, or we're going to need that next piece of equipment. Or in the case of my guys, more it's new trucks or new vans and things like that, that those are coming up. Well, we can be putting a percentage into that account now. And when it comes time to have to incur that cost, in a perfect world, we can just pay for it out of that account. But in a not so perfect world, we at least have a nice big down payment and we can lessen the amount of that loan payment has to be made each month. So those are just some of the accounts. For anyone listening who's not familiar with Profit First, reach out to either Wade or I. We're both happy to spend time talking with you. I think we're kind of Profit First nerds, if you want to call us that. We both have seen it transform our businesses, and we've seen it transform the lives of our clients that have implemented it as well. So, Wade, I'll just let you throw in a couple comments along that line too.
Well, I know you mentioned a lot of things, like going back to the overhead and, I talked about the seasonality, but I guess, I guess um, my thought with growing businesses, one of the things we see too often, like you go from a million or half million to a million or 250 to 500, whatever that thing is, when you double your revenue, you typically double your working capital ratio, or what you've got to have to continue to cash flow that. Well, one of the points that I also made in the book about the operating expenses is putting profit first in there and having that OpEx dialed in. Normally, a contractor, if they double their revenue, their operating expenses, their overhead more than doubles. I see that all time
Yes,
and time
all the
again.
time.
So the point I wanted to make there is that profit first puts those same guardrails around your,
Mhm.
you know, the mountain road where you don't go off the cliff. At least it gives you some kind of indication that as you're growing, you're needing more cash. So it does help constrain the thought of like, okay, I can't really go afford to buy this next F-250 Super Duty, So anyway, that was my thought on that.
Yeah, and I love that, Wade. Um, I have heard the comment over and over and over again that I used to make more money when it was just me and a helper. And
Yep,
now I've got 15 employees and we're hitting multi-million dollars and things like that. How come I can't make any money now? And it's because of that overhead cost that starts doubling and almost tripling sometimes because you start in adding layers of management in there. And now you have to go back and really run through your numbers and make sure that you're still making the profit that you need on your jobs. So, got to protect that profit almost at all costs. It's such an important thing in your business and takes a lot of attention to keep it healthy and to keep it growing along with your business.
absolutely.
Well, we've come to the point in the program that many of you are probably waiting for, and that is our hidden or unique profit leak. So let's get out our profit bucket here. Drop some money in it. And Wade, can you share a hidden or unique profit leak that you see when you've been working with your clients in this industry?
Well, I've never heard anybody put it this way, but I call it zombie rentals. So
Ooh.
what I like, you got it's like that rental that's left on the job. You rented a skid steer or something, and it sat out there an extra week, or you a lift or something like that, and your job went on a little bit longer, and they didn't go pick it up, and you continue paying on that. Those kind of things that I see all the time. That hey, if we could just go ahead and get that back and stop that meter running, that you know it's just like that truck idling with premium gas. It's like we got to stop that. So I don't know if you've ever heard that or used that one, but I call
No,
it zombie rentals. So
I love it. And I'll give you an example out of my own life. The contractor that helped us as we were building our house last summer left the porta potty sitting there. We finished the house up middle of September last year. They removed the porta potty maybe 1 or 2 weeks ago. So it sat out there September, October, November, December, January, February, March, April, May, and it went away in June. Almost 10 months that porta potty sat there. Well, I know when he did it originally, he's supposed to build a garage, but the county hasn't approved the permit. And now we're still got another 2 months before it'll come up for review again. And so I know that's why he didn't pick it up immediately, but it cost him 10 months worth of rental. So if he did that on our job, how many other jobs has that happened to him? Where he's got a porta potty. And that's not a lot of money, but if you got a few of them sitting around on different job sites over 10 months, that's a decent sized profit leak. He's a small business. So that's a decent sized profit leak for him. So I
well, I
thought,
mean, if you got a lift or something like that, I mean, that can be
yeah,
$100 a week, or 100 plus, a couple of hundred
yep,
dollars a week or more.
yeah, adds up really fast. So that's a
But
great one. And that is one we have not had on the program before. So thank you
okay.
for that.
Well, I was trying to be original.
You did a great job. So with that, Wade, what's the best way for somebody to get a hold of you if they want to talk to you more? Maybe they're more in the contracting side than in my home services side, or if they just want to comment or talk to you about your book, how can they get a hold of you?
Best way is probably just go to my website at carpentercpas.com. Also do a podcast too, so I appreciate you having me on. And we have Contractor Success Forum, and that's at contractorsuccessforum.com or on YouTube as well. So,
Okay. So, and well, that information will be down in our show notes. So please reach out to Wade, help him with sales of this new book that he just put out. I know you'll love the book. I couldn't hardly put it down. So it was a great book. And let's be intentional about protecting our profits and not letting them just evaporate on us. It's a hard thing to do. It's not an easy task. But it's one that's so important. So, once again, I'm going to say, just like I do almost every week, it's not about how much money you make, it's about how much of it that you're able to keep. It's all about profit. If you found value in today's episode, would you please take a moment to leave a review or share this episode with another home service business owner? We just love to increase our readership, our listenership. And I want to thank you for those of you who've been going out to YouTube and liking our channel and subscribing. I checked our viewers the other day and we've really grown. So thank you so much for that. And if you want some additional help identifying profit leaks or building out your pricing, your service structure, any of those types of things, we'd love to help. Wade or I are both available. We're both in that top mastery level of the Profit First world. We'd both love to help you because it's our job to help you find and plug those profit leaks because we want you to be able to hire the best teams available. We want you to love your business again. We want you to just feel like you're really contributing to your part in your local economy. So thank you again for listening to the Profitable Home Services podcast, and we'll catch you on the next episode. Bye bye.